to Uncle Dan's channel, where we focus in on the financial markets and how they've moved over the last 35 years since I started trading. And hey, I got an interesting one for you today, and it's open interest, which tells you how many contracts are open in a particular option contract. What does it even mean, open interest? But I have a very interesting case study for you. I was looking at DHT, and here's the stock chart. Now we've come down from about a month ago. We were trading around 6.25, and with the markets dropping, with freight rates going almost negative, all the tanker stocks have dropped. Now what's interesting is we've seen some very active trading in the calls for December, and I'm wondering whether that means they're now bullish the stock because we're near our lows. And does that tell us that we should be thinking about going long because the big money is starting to buy it? So this is where open interest can help us with our forensic science of what these guys are doing. Normally they're trying to hide their positions. So they try to sneak around without us knowing what they're doing. But there's a big order last week in DHT December 7 calls. Question is what were these guys doing? Are they getting long the stock by buying call options, or are they taking profits? So that's where open interest plays a role. So let's go into what happened and let's figure out what these guys are doing. Are they bullish or bearish? And let's figure out how we can use open interest to figure that out. Let's take a look at DHT. What happened on Friday in DHT? A very interesting situation. When we look here, we can see there's 4,000, almost 500 December 7 calls. Here's the open interest of 17,000. On Monday, what we want to know is, does that open interest go up to 21 or does it go down? The reason is, I'm going to show you here in a second time in sales. There's a big buyer in there. Clearly a buyer, and I'm going to show you how I figured it out. Now, if someone's buying 4,507 calls in December when the stock's at $5 and they're paying 70% implied volatility, why are they doing that? Why are they paying up? Those are not cheap. So they either know something and they're betting the stock's going to fly, or they sold those calls earlier. So that's what we don't know. We know they were a buyer. We don't know if they're closing or opening their position. So this column here is open interest. This tells us how many open positions are in it, but it's a 1-day delay. In other words, after the close, the clearinghouse will settle up all the trades, and then what's left are the open trades. And so we've got 4,500 contracts. They were used to buy a bunch of these at 10 cents. So the question is, are they closing a position and locking in a profit, or are they initiating a new position? So that's what we're going to watch on Monday. Now, how did I figure this out? I went down to time and sales and I picked the December contract. By going in time with sequence, I can see what happened initially in there. Someone came in at 222 and bought 10 contracts for 5 cents, and that was 59% implied, which is about where the market is. Then they bought another 10 at a nickel. Then they bought 29 at 10. Now look, when they're buying, you see what the bid ask is right here, 0.5, 0.50, 10. So they're buying on the offer, and that's why it's green. But look at the trades coming in. Look at that, 10, 10, 10, 10, 10, 10. Someone, now this is a market maker trading at 9, but look at this, 10, 10, 10, huge orders. Now, why you watch the sequence is look what happens here. It goes 10, 15, but trades at 10. Oh, that must be someone selling. But is it? Is that someone selling when there is someone actively buying at 10? I would argue that that is the same buyer who's now putting a bid in to see if anybody will sell to him. So right now, I think it's the same guy buying here at 10 when it's 10 bid 15. And I think these are, I don't know who this would be. I suspect it's the market maker. I'm not sure, like, who would that be going in there? But see, they basically, it goes offered again at 10, and then here he comes back in again. I'm saying this is all the same guy. This is what I think. And I think he's just putting himself on the bid. But again, we'll know tomorrow when we see what happens there. So I'm going to be watching that real close on Monday. We want to know, what is this guy doing in DHT? And we want to keep track of this to see if he comes in to take more of those. Now, what would I do with that information? If I know this guy is actively buying for 10 cents, then I'm going to look at that and go, what does this guy know? Does he think that some huge announcement's coming? And if I do think that, one thing you could do is say, well, look, if he's going to buy them at 10, I'll buy them at 10. Or what I like to do is if I know he's going to buy at 10, then what I'll try to do is I'll try to get the sixes for 15. I'll be on the bid and see if I can get the sixes. Now let's just see what was the low. What was the low price on the sixes for the day? See, they traded as low as 15, but they only traded 17 contracts. Now, if I can't get any of those at 15, maybe I'd try to get the fives at 40 because they traded at 40 quite a few times. So if I could buy the fives for 40 and sell the sevens for 10, that would get my cost down to 30 cents. My break even would be 530 and the stock's at 520. I'd do that trade. Now I'm capped to the upside. I can't make more than $200 and I'm risking 30. So it's not quite 10 times, but I'd do that trade. I'd definitely do that trade. So let's watch that on Monday and let's see what happens with the open interest. So that's DHT. Okay, this is to follow up from the previous day where we saw this large volume in the 7 December call for DHT. The question was, what were these guys doing? Were they actually buying calls because they're bullish, or were they covering calls that they had previously sold? In other words, were they taking profits at 10 cents on a previously large short position? What we know is that it was 17,000 and now it's 15,700. So of the 4,500 contracts traded on Friday, after the close on Monday, the open interest dropped by 1,500 contracts. So net, the number of open positions decreased by 1,500. So what that tells us is that net, people who were short calls were buying them back for 5 cents or 10 cents. Those were not new positions being initiated. Those were shorts covering and taking profits. So that was an important piece of data we needed. We needed to look at the open interest here on the far left. And previously it was 17,015 contracts. One day later it's 15,700. So that means that net people were taking profits. They weren't getting long. It means they're not bullish per se. They've reached max profit and they want to get out of it and do something else. That's what that means. That's it. We're sailing off from here. Leave questions, comments, feedback down below. Think about subscribing if you want to be a part of our journey on learning how to invest in the market. Thanks.